As a real estate investor, you need to track your income and expenses for your property, no matter which strategy you are doing for investing. This can be a grueling process and task. As rookie investors, you may have never had to do any type of financial recording besides balancing your checkbook. Honestly, does anyone even do that anymore, since most items are on auto pay or auto withdrawal or paid with credit cards? I had this person work for me before that was fresh out of college, and they couldn't tell me how to read a check. I asked them to look at the check and tell me which company should deposit the check into their account. They said the company that had written the check. Some of you are probably in shock, and some of you may be in the same position where you never learned a lot about finances, whether personal or business. I am Ashley Kerr, co-host of the Real Estate Rookie podcast and author of Real Estate Rookie. Today, we're going to do a mini lesson in tracking your income and expenses for your property. This can be for any strategy. This is a very basic lesson in accounting. Did you actually know that I went to college and graduated with a dual degree in accounting and finance? Yeah, I have no idea where the actual diploma is, but it was super helpful to have an accounting background once I got into real estate investing. I want to try to make this as easy as possible for you, since it is not the exciting part of real estate investing, except for those of you that are numbers people and freaks in the spreadsheets like me and love a good reconciliation. Anybody currently using QuickBooks knows how good it is when you hear that sound, the ka-ching noise when your bank statement perfectly reconciles on QuickBooks. No better noise and feeling. So let's go over why it is actually important to track your income and expenses. I'm going to breeze through this part so we have more time for the nitty-gritty, but it's important to give yourself reasons as to why you should put some effort into doing this. Obvious reason is for tax purposes. Even if you are not making money on your property, you still need to report the income and expenses on your tax return. Not only is it important for tax purposes, but if you're ever going to get financing on the property, refinance it, or even lending on another property, the bank may ask for your financials on your current properties. As an investor, you want to understand the performance of your property. Is it actually making money? Is it a good investment? Should you hold on to it or sell it? Tracking your income and expenses as how you will understand the financial health of your property. The last thing I'll add on this piece is that if you ever want to sell the property and show that it is income generating, then having these financials will be beneficial, and finding a buyer and give them the opportunity to get bank financing, where the bank will want to see previous financials. This happens a lot on the commercial side of lending. Before we go further, if you are interested in learning more about bookkeeping and accounting for your real estate investing, I want to recommend a resource created by Garrett Brown. I will link it in the description, but it is called the Real Estate Investor's Guide to Bookkeeping and Accounting. This guide is a great companion piece to this video. Don't worry, I also included a downloadable for you if you go to BiggerPockets.com/rookie resource. This downloadable is an example of if you want to manually track your income and expenses in a spreadsheet. It shows you what a profit and loss statement looks like along with a balance sheet. A profit and loss shows you the income your property generated and the expenses you paid out. This is not your cash flow. The expenses do not account for any loan paydowns. For example, if you have a mortgage on your property, then the principal you paid down is not an expense because it is money you are paying back. The interest, on the other hand, is an expense because you did not borrow it. A balance sheet shows your assets and liabilities. This will show your bank account balance, the purchase price of your asset, the loan balance of your debt, and any depreciation that has accumulated, among many other things. The balance sheet takes your liabilities and subtracts them from your assets, giving you the net worth. To actually track your income and expenses, it can simply be done on a piece of paper with a shoebox full of your receipts. But have you ever heard the stories of entrepreneurs bringing their shoebox of receipts to their accountant's office? Yeah, that can get expensive for your accountant to figure out your income and expenses. I highly recommend some tracking software, even if that is just a Google or Excel spreadsheet or a notebook. The important part is consistency, constantly recording your income and expenses. Some of my favorite softwares for bookkeeping are specific to a strategy, but some are able to be used for all strategies. The ones that are all-encompassing are QuickBooks and Stessa. I like QuickBooks because it can be used for any strategy and it has so many options. It is also well advanced. The downfall is that it has so many options that can be confusing and overwhelming how to actually use it. For Stessa, This one I like for bookkeeping because it is specific to real estate investors. But because it is specific to real estate investors, it is limited in what it can do. Stessa is also way more affordable than QuickBooks. Little pro tip is that if you have a BiggerPockets Pro membership, you can get access to more features on Stessa. Something to look into by going to your Pro membership resources. If you aren't a Pro member at BP, then I'm going to link below a link where you can go and find out more information about becoming a BiggerPockets Pro member in the description. Stessa is only one of the many resources and tools available with a membership. If you are investing in rental properties, quite a few property management softwares have an accounting software implemented into them. What I love is that a tenant can make a payment online and it is automatically entered into your bookkeeping, so you have to do nothing to manually enter your income. You just print a report at the end of the year to hand over to the person filing your taxes. Some of the property management softwares have it included and some charge extra for it. As a rookie investor, take the time to compare pricing on the different software. No matter which tracking path you choose, make sure you are saving your receipts. I recommend a paperless system to decrease clutter and storage. I like Google Drive, but a lot of the bookkeeping software also provides storage for your receipts that links right to the transaction. Some of the bookkeeping software have an app where you can scan receipts in on the go. This is really helpful to be consistent and to not let the receipts pile up. The only thing I don't like is that if you decide to switch software, it is a pain and a hassle to download all of the receipts to save them when you want to cancel that software. That's why I like saving in an online drive that I can always keep or can easily download. If you are taking value from these rookie resource videos, please hit the like button and make sure you are subscribed so you can get notified when we release more of them. The last thing I want to touch on before you head over to the resources page on BiggerPockets for the downloadable is how to make tracking a little bit easier on you. Plus, give you a little liability protection if you do have your property in an LLC. Don't mix your personal expenses with your business expenses. If you have a property, use one bank account and one credit card for that property, or even just for all your rentals, unless they are in different LLCs. There is nothing worse than going through your personal bank account transactions looking for what expenses are actually for your property. If you have an LLC, you should 100% be using a separate bank account and credit card. This is for tax purposes and for liability protection purposes. To find out more about LLCs and how you should treat them for asset protection management, you can check out our previous YouTube videos with Brian Bradley, an asset protection attorney. I'll also include those in the description for you with a link to check them out. Before we close out, I want to hear your ideas for our next rookie resource video. What is something that you want to learn about? Is it a checklist you need, a template you need? What are you struggling with that I can help you with? Make sure to leave it in the comments below. I really do enjoy this rookie resource series and would love to know more about which checklists, templates, or documents you need. Thank you so much for watching. If you haven't already, make sure to follow us on Instagram at BiggerPocketsRookie. I'm Ashley Kerr, and I'll see you next time on the next rookie resource.